Alright everybody, if you're watching this video, you're probably a new customer to Trade Advisor Pro, and I want to welcome you. And you probably subscribed to our Pro Signals Direct service, which is where we send our trade signals directly to your inbox. And with this service, and I've mentioned this before, and you probably got this in a welcome email, but I highly suggest that you set your trading platform and your email that you're going to be using to receive the signals from us, the update service from us, on your phone. Now, most phones nowadays, if you don't have a smartphone and you're trading Forex, I'd highly suggest that you upgrade your phone to a phone that you can at least get your email on, and you can read it on. And I'm going to suggest that most brokers out there, at least a lot of the bigger brokers out there, have the ability for you to trade directly off your cell phone. So you can log in, enter trades, close partial positions, add your stops and limits, all of those. Okay, so I want to make sure you do that from the beginning, because some of these trades we're going to show you in a little bit here are going to move fairly quickly. Some of the trades we'll send you, you'll have plenty of time to put them in advance. So with that, now you may also be a customer of our Mirror Trader Pro. Now, as a Mirror Trader Pro customer, I want to tell you up front from the beginning, it's good to watch this video to get an idea of how to use the Mirror Trader 4 platform and things like this. But Mirror Trader Pro customers, listen to me very closely. When we send you these emails with these trade updates, these are nothing but for your information only, because the trades that we are sending to Pro Signals Direct customers, you're going to be entered automatically through our VPS server into your brokerage account. So do not double up. You do not need to take these trades and enter them on your own. We are entering them for you. Alright, so without further ado, let's get into what one of the trade signal emails will look like, and then we're going to take you through the process of how to put them into your software if you're a Pro Signals Direct customer. Okay, so this is what an email would look like. And it'll say Trade Advisor Pro trade updates, and it usually has a number. In fact, they always will have a number. In this case, this is 597. Now, these trades in here are demonstration trades only. They're not actually trades we're taking. I just needed to put this information in here. I took a couple of trades in a demo account so that I can show you how to manually enter these. So from the get-go, let's add a little bit of text in here. Usually I'll have some text in the beginning, so I'm going to pause this video and I can add a little text here because I want to show you how we may manage a couple of these trades at the same time. So give me just a second. Alright, so I'm back here. So here's what I did. I added a little bit of verbiage in here that basically says, and some of these emails, there will not be much verbiage, there will usually be a little bit, but many of the emails actually have a lot of information. You need to make sure you read the emails clearly, because a lot of times we're showing you how to manage a trade that we're already in. So in this section right here, it just says that we are up 100 pips on our Aussie US dollar trade. Let's close out 50% of our trade in profit and move your stop to open price. Okay, so you'll see this a lot in our email updates, so I want to show you how to do that. Now, in reality, we're not up 100 pips on this trade. I just entered it 5 minutes ago, just so I can show you how to close 50% of your trade using the MetaTrader 4 platform. So here we are in a MetaTrader 4 demo account, and I'm going to scroll down. Actually, let's move these charts up. They were kind of in the way. There we go. Okay, so we have a Aussie US dollar trade. Actually, it's up a few bucks, but I just entered the trade. And this trade, it said we're up 100 pips, and in reality we're up about 2. It's no big deal. But we want to show you how to close 50% of your trade, because we get this question a lot, so I want to make sure I explain this in this email first. That a lot of times when we're in a trade, especially when we see that long term this trade has a potential to move either to a very profitable profit target or beyond it, that we'll close 50 to 70% of our trade once we get enough pips. It could be 30 pips, could be 60 pips, could be 100 pips, depends on the trade. And we'll close out a percentage of our trade in profit, and then we'll move the remainder of our trade to break even, or our open price. The reason being, worst case scenario, if the price moves against this opposite direction, we've at least closed out most of our trade and profit, and we've eliminated our risk from the very beginning of that trade. So let's show you how in MetaTrader 4 how to close half of a position. So here's you have all these different trades. We have a pending trade, which we'll go to in a little bit. We have 2 live trades. In fact, if you look on this email, it says open trades. Okay, the New Zealand dollar sell position and the Aussie dollar sell position. And those are our open trades. That means these are live trades that are sitting here in the market. Okay, so what we're going to do right now is we are going to close out 50% of our position, just like I said. So you can see I'm trading in this account 50 round turn standard lots. Okay, that means these are for the most part on most pairs. Every time this pair moves up 1 pip, it's $50. Okay, these are so I'm sorry, these are 50 mini lots. So okay, so we're going to right click on this. First of all, you find the pair you want. Since we're looking at the Aussie dollar US dollar, you can just click on it, or from there you can just directly right click. Just make sure the right pair is highlighted. Okay, we're going to click on, we're trading 50 lots right here, right? So we're going to click on close order, and this window is going to come up. Now it shows Aussie US dollar 50. Okay, if we push close now, it's going to close the entire trade out right now at $2,350 in profit. Okay, but we only want to close half of our position. All right, so we're going to change this to 25, and if I click close, okay, it will change this amount. It'll close out 25 of the lots and keep 25 of them active. But here's one thing we want to do too. Right now we have a stop loss at 98.80. We want to move our stop to break even or our open price on the remainder of the trade, just like it said in the email. Okay, so what we're going to do is, if our price right here, when it says price, this is our open price, which is 98.42. So we're going to move our stop loss to 0.9842. That's the exact price that we got into it. So worst case scenario, if the trade, since we sold, if the trade goes back up a few pips, at least the other 50%, it closes at 0, and we've eliminated our risk. Okay, like if you've been on one of my webinars, one thing I beat a dead horse on is just something that Will Rogers said long ago, that I'm not as much interested in return on investment as I am return of investment. The number one thing we need to focus on in Forex is preserving our capital. So the first thing we want to do is, once we are up to a certain point, is we take out profits and remove our risk completely by moving our stop to break even or even in the money. Okay, so at that point, and we're going to keep our take profit at 9,800. So we'll just keep that at 9,800, and we'll push close. Ready? Boom. There we go. Now we've got 25 lots left. We made a profit. You probably saw this thing jump up just about a little bit. We've closed out half our position. Our opening price right here was 98.42. Our stop loss, why does it still say 98.80? It didn't change. Okay, so let's change. Okay, so for some reason it didn't change. So here's what we're going to do. We're going to now modify the order. Okay, so if I would say move your stop to so and so, you click on the pair, you highlight the pair you want to make the change. You right click, click on modify or delete. You're going to click on modify. It's going to be modify, and we want our stop loss to be our open price, 98.42, 98.42. Now this software may not let me do this, but we'll make sure to see if it does. There it goes. Now what will happen is, if this price moves down, we're only up 5 pips. If this price moves up 5 more pips, it's going to close out that trade at 0. Okay? So now if I ever tell you close out a trade completely, let's say in the email that I sent you it says, I don't like where the Aussie dollar's going, let's close out our trade now and profit. Or it could be close it out now with a little bit of a loss. You come back to your software, you make sure it's highlighted, you right click, close order, close completely. Boom, it's done. Made a couple $1,000, $2,400 in profit on that trade, and there we go. So let's go back to our email. Now when you go through this email, you almost have to need to go through it like a bullet point and make sure you do everything that it says to do. Okay, so now we just did the first part. We closed half our position, we moved our stop to our open price. Okay, now we have new trades. Okay, so we have a couple different trades here. Okay, and at the bottom of this of the email, it's going to explain a couple different things. And there's 4 different levels here actually. In fact, I'm going to put one thing in here. I'm going to change this. Expires. I want to show you how. So we may do this. 5:21. 5:21. 4 p.m. GMT. Okay. All right. So at the bottom here of the email, it explains some different annotations. You may see a star MM. Now that means it is a market mover. Okay. Now it says this trade is moving fast. Be prepared to enter the trade within 15 minutes. Now I'll tell you why we do have these market mover trades. In fact, this is supposed to be here. Okay, the reason we have these market mover trades is because let's talk about trading for just a second here. Like right now, as I'm recording this video, the euro and the pound have been dropping like a rock. In fact, let me pull up a chart here. That's a euro daily chart. Let's pull up. Yeah, let's just pull up a euro daily chart. Okay, you can see here that starting from pretty much May 1st, that this pair has dropped. Now today is May 20th, so for almost 20 days, price is drop. Now, when we know that the trend is your friend, you never want to take counter trend trades unless you know what you're doing. There's our ways. In fact, I scout for our Mirror Trader Pro customers. I take daily scalps that are counter trend that are very, very profitable. But on a downtrending market like this, trading off the daily charts, I would not suggest trading counter trend. All right, so here's what we do. We don't just jump on the bandwagon on any one of these trades. You sell the rallies in a downtrend, and you buy the dips in an uptrend. So here's what this means. You can see back here that this pair had trended up for this period of time. Okay, for what's that? 3.5 weeks. So as this price was going up, we are waiting for an opportunity to get on board on this uptrend. Now we don't just click a button and buy at any one given time. We need to wait for a proper entry. So you can see here, price went up, pulled back. This is called a dip in an uptrend, where somewhere down in this area, which if you look here, this was a key support level here, and I know when you go back on the weekly and monthly charts, there's a support level here. Okay, it's right below the figure, which is 1.3000 mark. And when price came down and touched that mark, that would have been a good opportunity to buy. So as price is going up, we only want to buy, or we only want to trade with the trend. So we want to buy this pair at that point, but we wait for a market correction to pull down to take us into a buy entry up. Does that make sense? Same thing with this trend here. And this is down for the last 20 days. So now what we'd be looking for is a reversal back, and this could be up between his 98.20 and 3,000 mark would be an excellent sell opportunity. But we are waiting for this pair to pull up for a sell entry. Now, let's take this back to the email trade updates. Now, when we talk about these market movers, we don't. Sometimes on these pairs, we can tell you in advance, hey, price is moving here and here, massively strong support. We're going to sell here, put a stop here, and our profit target is way down here, right? Now, when we do that, that's going to be a limit order, okay? So like on, for example, this buy limit pound dollar. Right now we're not going to be buying the euro or buying the pound, but these are just examples, okay? that means a limit order means it's a pending order you're going to put into your software in advance. We're going to show you how to do that in just a second. But the market mover, we may be sitting here waiting for price to come up, and we may narrow down to a 15-minute chart. So we can pull up a 15-minute chart here. There's a 1 hour. Let's say we may be waiting for the 1 hour chart to give us confirmation that that little uptrend has turned and now it's about to go down. Okay, but when we do that, when we get candle confirmation and other confluence of events that happened that show us that that trade is officially retraced, okay, it's gone up to a certain point and now it's turning, then we send out a trade signal that shows us that the entry is now valid and it's time to pull the trigger. Now, here's the thing. If you wait 24 hours, that trade could be long gone. It could be all the way down here. At that point, it's invalid. The people that got into trade are writing that thing down, and then you're going to be in profit. So you want to make sure that you're buying as close to the open price that we send to you as possible. All right? So the market movers are basically saying at the bottom, you need to be prepared to get in that trade. When we send out a trade, it says market mover, you need to be able to get in and enter that trade into your broker platform. Okay. Now, a limit order is a pending order. You're setting at an advance. We're waiting for price to come to us. Like in this example here on the daily chart, if I set a pending order here to sell, we're waiting for price to come up to take us into an order for that price to shoot down. Okay. So that is a pending or limit order, and your brokerage firm may call it something different. And if you get confused, just ask them. But pretty much every broker out there offers a limit order. Now, a market order may basically say buy or sell at the current price or better, and we'll show you that in a little bit. And expires, which you see on this trade up here, means that this trade has not hit. Once you enter it into your software, if this trade is not hit by this date and time, cancel it. Okay. In fact, we're going to move that to here because it's going to be, those are going to be on limit order. So let's show you how to enter some of the trades into the software, and we'll take it to the next step. Okay. So the first new trade that we send you in this email says to buy limit. So we're going to buy pending. Okay. That means we're going to buy the pound at 157.25. It's going to be sitting there as a pending order. Okay, so we're going to go to our software, and we're going to buy the pound at 157.25. Now, let's talk about first calculating the amount of lots you need to trade. So let's talk about, and I hope you've at least watched the video already on equity and risk management. If you haven't, you need to definitely watch that. We're going to suggest that you risk no more than 2% of your total account balance. So let's go to my demo account here. And you're going to see that the balance of this account is $5,139,000. So I'm just going to round it to 5 million. And let's say I am comfortable with a 2% risk per trade off of 2% of my total account balance. Okay? So the first thing I need to do is calculate what is 2% of $5 million. So it's 5 million times 2%. Okay, that's $100,000. So I know that I am willing to lose $100,000 on this trade. If the trade does not work out, if it goes against me, I'm willing to lose $100,000, and I'm comfortable with losing $100,000 on this trade. Okay, so that's a big part of equity management. You have to decide, what if you lose 10 trades in a row? At 2% leverage, are you willing to lose 10% of your account balance? Can you wake up the next day without freaking out? If you can't, you need to cut down to 1.5% or 1%. A lot of trading comes down to your level of emotions and what you can handle emotionally. Okay, and you can usually handle a little bit more risk as you get more experience, but the reality is the most experienced traders usually never manage leverage more than 1 to 2% of their account balance. Okay, so we're going to say 2% max. Okay, so you're going to lose $100,000 if the trade goes against you. Now we have a stop loss, a price of 1.5725, and our stop loss is 1.5692. So we're going to put in that number minus 1.5692 equals 33 pips. Okay, so we have a 33 pips stop loss. So what we need to do is take $100,000 and divide that by 33. Okay, which means I'm just going to round it off. You're willing to lose, if that trade goes against you at a 33 pip stop, you're basically risking $3,000 per pip. Okay. Now, if you're using standard lots, which are 100K lot, they are on, for most pairs, $10 per lot per pip. Now, most of you are going to be using micro lots. Okay. I'll show you how to enter micro lots in just a minute. So, but I'm going to take $3,000, divide that by 10, and I'm going to be trading 300 round turn lots. So now I know my calculation. I'm going to buy, so you click on new order right here. Okay, and we're going to go to the drop down menu, find the pound dollar. And this is, since it's a market order, this is a limit order, so this is not going to be execution, it's going to be pending order. And it's going to be a buy limit. You can also do buy limit or sell limit. We never use buy stop or sell stop ever. Okay, those are not the kind of orders that we take. People who do stop orders, for the most part, I've never seen them be successful. But in this case, it's going to be buy limit at 57.25, 1.5725. Okay, our stop was 156.92. So it's 1.5692. Oh, one more thing before I finish. You have to put your volume in first. See the price? As soon as I change the number of lots to 300, it wipes out that price. Okay, so enter your number of lots first. So 1.5725. Our stop loss is 1.5692, and our profit target, or your take profit, is 1.5812. Okay, that's what we're looking for to pull our profit. 1.5812. Now, in this order, we happen to have an expiration date. So I'm going to say 5:20 at 1 at 4 p.m. GMT is my expiration. So it expires 5:21 at 4 p.m., which is 1600 hours, right? And then when you're done, you check your order. Always double check, right? 300 round turn lots. We're going to buy pending order at 157.25. Put our stop loss at 156.92, and our take profit is 158.12. Okay, we have an expiration date set in there. We push place. Boom. Okay. Now what happens is that order comes down here, and these, you have your live orders here, and these are your pending orders here. Okay. Now, so there we go. We just entered an order as a new trade, and now we go to the next one. Market mover. You just got the email. It's time to get this order in fast. This is buy market. Now, what that means when you buy market on the euro US dollar, we're going to buy the euro. So we need to go buy. Now we're on the euro. Okay, you can choose from drop down menu or choose euro. And buy market means instant execution. That means right now. Now in this order it says buy the euro at 27.90, and our stop is 127.38. Okay. Now I want to show you something. We want to buy at 27.90, but price is actually lower than 27.90. If price is lower than our stated buy price, that is actually a better entry opportunity for you. If we say to buy at 27.90, and we're expecting the price to go to 1.3000, and you can buy at 37 pips lower than our original buy position, this is a better buy position. Now if you got in here and this is buy at 27.90 and our profit target's 27.96, and the price is already 27.70. The price is already I'm sorry, I'm getting the numbers mixed up. Let's say I told you to buy at 127.90. Okay, and our profit target is what I said here at 129.00. Okay, if you get in here and the price is already 128.50, the pair's already moved. Okay, it's already gone. You do not enter the trade. So if you're buying, you want to make sure the price is at market or pretty close or lower. If you're selling, you want it to be at our stated open price, our suggested open price, or higher, or it could be a little lower, but just make sure it's close to that trade or better. Okay, so back to our trade. In this case, we would 27.90. Oh look, price is 27.62. Woohoo! That's a better price than our initial suggested price. So I'm going to enter it at that price, and we're going to put a stop at 127.38. 1.2738, and our profit target was 129.00. Okay, 2,900, and we push buy. Instant execution, right? Push buy, boom. Now you are in a live trade, trading 300 round turn lots, $3,000 per lot per pip. $3,000 per pip, moving up and down on this pair. Okay. One thing you may want to do also, now when you see this over here, watching these numbers move up and down, especially if you're dealing with a big account, can mentally mess you up. I highly suggest, see this bar up here? Just right click, go to profit as points. Now some of these points and some of the platforms are pips. Some of these are just a point system that I don't understand, because I know I'm not up 98 pips on this trade, and I know we're not down 28 pips. These are just points, and I don't understand what they mean. But it helps you to not visually look at the numbers. Okay, I suggest just working off of pips or points. Do not look at the numbers. But for this example, I'm just going to go back now. So we entered the second order. Okay. Now pending trades. Let's talk about pending trades. Okay. What this means is this is a trade signal we already sent out that should be sitting, if you're already an existing customer, should already be sitting down here as a pending order. Now if you're brand new to the service and you're watching this video and your first trade update says pending trades and you see some pending trades, you can enter all the new trades into your platform and all of the pending trades into your platform. Okay. In this case, I didn't actually enter that pending trade in there. I just wanted to use that as an example. Now let's talk about closed trades. This means this was a pending order that never hit our target, or we don't like where the pair is going, and so we're going to close it out before it ever goes live. Okay, this one says the buy euro at 100. We're going to cancel that trade. Now, so we're going to go to the software. There it is right there. See the trade? You can highlight it just by clicking on it. You right click, modify or delete. Just click delete order. Boom, the trade is gone. See it disappear? Alright, now next order, open trades. There we go, we have our open trades. Now we just of course canceled out the Aussie dollar for example purposes, but you should still see that New Zealand dollar, US dollar sitting right in there. Okay, oh look, we're up $5,000 in profit on a demo account, no big deal. So I'm just going to close out that trade. Oops. Close that. I'm going to close this one. And I'm just going to close all these out. Right click, close order. Okay. You can also modify an existing order. If you have a pending order sitting here, you can right click, modify or delete. You can move your stops around, adjust your take profits, whatever you need to do. Okay. So that's pretty much it in a nutshell, folks. You should be able to understand that whole process. Again, if you're a Mirror Trader Pro customer, where the trade signals are being sent directly through a VPS server into your Forex account, do not enter these trades, or you're going to be in each trade twice. Yes, you could have twice the gains, but you're also taking twice the risk. Don't do it. Okay? So anyway, if you have any questions, contact us at support@tradeadvisorpro.com, and we're here to help you. And have a good one.